Yields on government bonds in Nigeria continue to rally with yields of many bonds now falling below 12%. The NSE is also planning to take bonds retail in 2013. Joining me to discuss the prospects of the bonds next year is David Adepoju, head of global markets at Standard Chartered Bank in Nigeria. David, it's great to have you on the show as always. And first of all, maybe I should talk about the dynamics we've seen over the last week. Some people had already told me that this is likely to happen. I think the expectation of monetary easing going into next year is we are now beginning to see some people, if you like, front loading some demand, and we're now beginning to see yields even fall below 12%. Your thoughts on this dynamic?
I think you're absolutely right. And there are three factors that are driving liquidity right now and are driving bond yields. So the first factor is the amount of cash in the system. So anytime they pay FAC allocations, the banks have a lot of cash and they need to put that money somewhere. The second factor driving it is that we're still seeing demand from offshore investors. So money is still flowing in, not the volumes that we saw in August, but there's still that flow. Then the third, which affects offshore investors and Nigerian investors, is the outlook for 2013, where the general consensus is we're likely to see an easing in the economic environment, so they're likely to see an easing in interest rates. But also, if you look at the macro picture, especially for the offshore investors, the central bank has come up very strongly to say that they will protect the naira.
Right.
They want to see reserves at $45 billion.
Right.
We're also looking to have a smaller budget deficit in 2013. So these factors paint a much better picture for the economy, and that encourages offshore investors who have very few alternatives to invest. And Nigeria, we expect, is going to be an interesting investment market in 2013.
How low can yields go in your view? 2013, do you think we will see single-digit yields? Is that a possibility in your view? I guess it would probably be, it really all depends on where inflation goes, but your thoughts, given the flow of demand that we've seen, given people's rating, for instance, of where the naira may be, where Nigeria's credit rating is, your thoughts on where we may see yields?
Although it's very difficult to call this, right?
It is, but what's your base case?
Yes,
it's always tough,
case.
I know,
Okay.
because there's so many moving parts. We have the oil price, it's quite a few things that could change the dynamics, but your thoughts on a base case scenario, highest probability scenario.
Okay, so if we look at what's happened this year, and we look at the things we know that are likely to happen next year, i.e. the currency is stabilized, which it has been and that remains. The fiscal story is still very good. If those things still happen, and I think we could see another 100 basis points, or even slightly more than where we are here. And because of offshore investors, which I have to mention are the second most important investor class in Nigeria.
Right.
They're always comparing between how much value do I get out of putting my dollars in Nigeria against how much value do I get out of putting it in Ghana or Tanzania. So it's not just a Nigeria story, it's a relative value story. How much relative value am I going to see between different markets? For the local players, it's all about projections. If I think inflation is going to come off to single digits, then it's very clear that the central bank is going to ease.
Right.
So what I'll do at the beginning of the year is to load up on securities ahead of that happening.
Right.
That's our central theme. Our central theme is the story looks very good. A number of factors are working in our favor. So we do see another 100, probably 150 basis points.
All right, but I think a new dynamic here is the NSE and their plans to take bonds retail. And maybe we can talk about the potential success for this and how it's likely to be received. I mean, from what you're hearing from retail investors, I think it's really tough for retail investors to get direct exposure to bonds as the way the market is currently constructed. But your thoughts, and especially from looking at other markets, the potential for this program of the NSE.
Okay, so taking from my personal experience, because I used to work in the Middle East in Dubai, individuals investing in government bonds is big. It's a big part of the investment culture. So a lot of it goes through pension funds or asset managers, but individuals also have access through their stock exchange to invest in securities. This year has been, there's been a shift in investor appetite and investor behavior this year, because the difference between leaving your money at zero in a current account or investing in a fixed income instrument where you could be getting 15 or 16% is very wide. So you've seen a lot of people move into buying treasury bills, which has been on the short end of the curve. Going forward, I believe that what the NSE has done here is a move in the right direction. I don't think the impact is going to be very huge. It's not going to be huge right now, but it's a move in the right direction where you or me could invest a relatively small sum of money in the fixed income market. You get your statement at the end of the day. And I think individuals are just more familiar with the stock exchange than they are with dealing with the primary dealer or walking into a bank. And
so it seems like the natural place to go and buy.
Exactly.
But I guess there will also be some, should I say, financial education that really needs to happen to get more people to buy into that idea. But like you said, it's probably something that's going to take some time to build up. But the final point for today is the FMDA trading platform. That's quite interesting. The NSE finally endorsing that. I want to get your thoughts, especially when you consider the fact that we have quite a few other securities and bonds like subnational bonds, the states are issuing bonds, some corporates have bonds out there that are not, actively traded. So your thoughts on the impact that you think this new platform may have for the tradability of some of those instruments?
Okay, so what we believe is that it's actually going to improve access, because when it helps with straight-through processing, there's a lot of transparency in the system. So we believe it's going to help improve access for a number of players. But one other thing you need to look at is the bond market has taken a very deliberate journey over the last 6 years, where first we had the primary dealers, first the bond market started, then primary dealers introduced. Now we're looking at systems to make it easier for the entire economy to participate, this whole financial inclusion, participate in the financial market. So this is just another step in that direction, which again just makes it easier, more transparent, less operational risk. Right. So that's what we're going to get from this new system.